We're watching your money this morning. Futures pointing to a rally at the open. Dow up 184. It comes after a pretty sharp sell-off on Christmas Eve. On the Monday, the major indices all sliding over 2%. The Dow and the S&P closing in on bear market territory. The Dow is about 300 points away. The S&P about 6 points away from being down 20% from those recent highs. Let's bring in Oxbow Advisors Managing Partner Ted Oakley. Ted, good morning.
Good morning.
You've been cautious for a while. Are you still cautious?
Well, as you know, Lauren, if you've looked back the last 6 months here, we've been talking that we expected this to come about. And I suppose you could probably get us some movement back up the next few months. But I think people have to take a look at what's going to happen in 2019. When you get these really bad fourth quarters, they really don't tend well for the next year.
What level are you looking at end of 2019 for the S&P 500?
I don't have that. I don't do it that way, really. We just look at it from a 90-day perspective, and I'm thinking here that you could probably get maybe a 10 to 12% move here before you extend it. But I think what you have to look at is the Fed and what's happening in the economy itself, and we're just looking at 19 itself being a tougher year now.
So what is happening with the Fed and the market in general? You know, the president's been talking, criticizing the Fed and its chairman pretty frequently, but he also talks about the feel of the market. And a human being often has a feel of the market, not a computer, not an algorithm. So what exactly is at play in this sell-off?
Well, what's happened with people, I think, Lauren, is they've had 10 years of down market and of up market. I'm sorry, and what's happened is you get a down market all of a sudden, and they really get. I think they get spooked with it to a degree. But you have to think about this when they open those statements about the first or second week in January, and they're down 18 to 20%. That's going to change the mentality of people in general. Safehaven
stocks are also in jeopardy. Investors are, searching for new investments to turn to. What do you buy when you see this stock market turbulence? So where would you suggest investors look in 2019 or right now if someone wants to come in and buy the dip?
Well, a couple of things you have to look at. For us, our very largest position is the 20-year U.S. Treasury. I know that's a contrarian move, but we've had it since late summer. I think we'll keep it most of the first half of the year anyway next year because we think that's the best place to be in terms of income and probably a move in the price itself. But there's a lot of income items out there as well. If you look at just in the last couple of days, we picked off a few. Schlumberger with a 5.5% dividend. Las Vegas Sands, 6% plus. A couple of the MLPs are really cheap now. Enterprise Products, Tallgrass. Some things that we really like that pay cash flow. And I think people ought to look at cash flow next year. It'll be a big part of what happens.
Ted, good morning. Mitch Rochelle here. One of the things we saw in 10 years was not only the markets going up, but volatility going down and was really non-existent for much of that time. So as investors start getting back in, other than where they invest, is there any suggestions you have on how they invest? Because they're going to be investing differently in a period of higher volatility relative to where they came from a period of low volatility.
Well, they will go safer. I mean, I suspect that I know utilities were off a little bit the last couple of days, but if you look at income items in general, they'll probably head that direction. I'm not certain they can totally hide in consumer stocks, but I think in income items that would help them quite a bit. And they need to look at some safety in terms like the Treasury, that sort of thing. Just reposition a little bit. You don't have to change everything.
A couple months ago, we were very concerned about inflation. Are you concerned now about deflation?
I'm not concerned about deflation, but we thought for some time, starting 4, 5, 6 months ago, that we had peaked in inflation. And if you look at the numbers that'll be coming out, I mean, if you look at the PCE or the consumer price indexes, they've gone flat to down a little bit in terms of the growth level. And so we expect that in the part of next year as it comes about. You have to remember oil is a lot cheaper than it was as well. So all of those things will play in. And I think you'll see a very low inflation number by the time you get into the second and third quarter.
Yeah, so then maybe the Fed just stays put for a little bit. Well, I don't know. All right, Ted Oakley, thank you for giving us what you know this morning.